In this video, we're going to be going over two simple methods on how to determine your life insurance coverage. The first method is a very simple, quick and easy way, and the second way is a little more in-depth and sometimes called the D.I.M.E method. So in looking at how much life insurance coverage you actually need, experts recommend about 8 to 10 times your annual salary in life insurance coverage. So for example, if you make $50,000 a year, $500,000 in coverage. So the first method is to take your monthly take-home pay and add 2 zeros to the end of that, and that's going to give you about 8 years of income replacement. It's a very simple way to do it. For example, if you make $3,000 a month take-home pay, that's what actually hits your checkbook, add 2 zeros, that's going to be $300,000 in life insurance coverage. Now, when would you use this approach? You would typically use it when your situation is very simplified. There's not a lot of debt, there's not a lot of other business entities or things that you have to cover, and it's just basically a refresh on your income if something were to happen to you, so that way your family can continue existing on the same financial path that they're on now. This method is also good for when your children are in their teenage years, so they won't need as long of income replacement before they're out of the house and on their own. Now the second method, the D.I.M.E approach, is used in situations where it's a lot more complex. So we're going to break it down so that way you can see how D.I.M.E works and what it actually means for your coverage. So let's go over what the acronym D.I.M.E actually means. The D stands for debt and death, the I stands for your income, M is for your current mortgage, E is for education expenses for children. So if you want to send your kids to college, it'll cover those expenses. So let's break that down a little further. The D for debt and death, what you're going to do is you're going to estimate how much it'll cost for burial expenses. That's the death portion of the D. The debt portion of the D, what you're going to do is list all of the debts that you have that your family will be responsible for, i.e. an extra car, credit cards that are in both people's names, medical bills, any of that type of thing. You're gonna list all of those out in order to figure out what that debt portion is. The I stands for income. So what you're gonna do is you're gonna take your monthly income, your take-home pay, add the 2 zeros to it, and that's gonna give you that number for the I. So in the previous example, if we had $3,000 a month, you add the 2 zeros, that's $300,000, that's gonna replace your income. The M is for the mortgage. So you want to figure out how much is left on the mortgage to pay, and then just put that number in. It's pretty self-explanatory. The E is for educational expenses. So what you're going to do is you're going to take a look at your children and see how much it would cost to send them to college, or how much you'd want to contribute toward their education in the future. So if you want to give each child 50 grand or 100 grand or 25 grand or nothing, you can put any one of those in the column for E and determine that. So now what you're going to do is you're going to add all of those lines together, and that bottom line is the amount of coverage you're going to need in order to replace your income. Once you have that bottom line number, you're going to subtract any amount of assets that you have to cover that line. So let's say that bottom line number works out to $500,000. Now you're going to subtract, let's say you have $100,000 in retirement assets or savings or whatever that's going to be left behind. Now you only really need $400,000 in coverage, for example. So now you do that for the other spouse, and that figures out how much coverage your family would need for total protection and life insurance. Now that you know how much coverage you need, watch this video right here, and that'll tell you what type of coverage you may want to get. And if you've gotten value out of this video, please take a second to hit that like button, and if you haven't already, make sure you're subscribed. We'll see you in the next one.